Folks, I'm going to tell you 5 quick facts about black bull markets. Now, did you know, number 1, they're New Zealand FMA regulated. Number 2, did you know they have a copy trading service where you can either be a signal provider or copy signals? And number 3, did you know they've got over 26,000 tradable assets, including Forex, crypto, stocks, indices, and even more? And number 4, did you know they offer 500 to 1 leverage? And number 5, if you open up an account today and trade 1 lot a month, they're going to give you TradingView Pro for free. Check them out, Black Bull Markets.
What's going on, ladies and gentlemen? Welcome in. Happy weekend. Hope you guys are doing well today. Last live session of the month. We're going to be off in April. We're going to come back in May. So wanted to hit us off with a bang here. We're going to be going over a lot of pairs. We have a lot of really good setups for you all today. So, we had a very relatively slow week in terms of volatility. Didn't see much movement. We did get a few trades that were worked out in our favor. So very happy about that. However, do have a lot of good setups for you all this weekend. So as always, please feel free to drop your location in the chat. Drop any pairs you guys are looking at, any trades you guys took over the past week. Would love to see where you guys are at and all that good stuff before we get started. Of course, this is all going to be recorded. So if you have to hop off at any time, no worries. But we will get started here in just a few minutes. Just want to wait for people to trickle on in here. We do have a huge giveaway. And no, I'm not going to April Fool's you. Don't worry. I know it's April Fool's, but this is for real. We are going to be doing a huge giveaway, probably the biggest in Ariel Fx history. So very excited about that. I will be discussing that later on in the live. Alrighty, we got South Africa. We got Zambia in the house. Good to have you guys here. Euro USD. Let's see. Is that one of my pairs? I believe it might be. Yes, it is. Euro USD is one of my pairs today. I do have like 21 pairs I'm going over today. So we're going to be doing a full market breakdown. I'm going to try my best not to go and do top down on all of them because I know that could take quite a long time. We're going to keep it to our maximum of an hour and a half, 2 hours in length. Of course, it is weekend, guys. It is Saturday or maybe Sunday for some of you. I don't expect you guys to, sit there for 2 hours and listen to me talk. I know you probably would rather do anything else besides that. But I do have a lot of good value for you all today. So if you want to have a really, really good week, stick around, get the value, write down all the notes you can, and we'll go from there. As always, have my coffee. Let's see. We got India. We got Baltimore, Maryland. We got Botswana. We got Mexico, South Africa. Good to have you guys on today. Let's see. Gold, GBP, JPY. I'll be going over GJ. I won't be going over gold just because I don't trade gold. Morning, Hugo. Appreciate the kind words. This is the best podcast or best live stream. Appreciate you guys. Still on NZD Swiss franc. Yep, we'll be talking about that. We'll talk about EG as well. For sure, for sure. Good to have you on, Mark, Joshua. Good to have you guys on. Where's Aiden? He doesn't do these live sessions. He does Smart Money Sundays for us. So for those of you who have been, following along with Smart Money Sundays episodes, he posts those every Sunday evening. So just depending upon where you're at in the world, if you're in, UK or if you're in Africa, you're in Asia, you're probably sleeping by the time that we release it. So come Monday morning, you should have that on your YouTube dashboard. If you follow Ariel Fx on YouTube, it's just Ariel Fx, type it in. Post a full market breakdown, what he's looking for. And that's why I want to do this myself. And he does Smart Money Sundays himself, just because it's 2 different views of the market. Usually they're the same just because we trade the exact same way. However, he looks at things a little bit differently than I do sometimes. So that's why I like to go over my pairs here on the live, and then he can go over his pairs there on the Smart Money Sundays. All right, we got Montana. We got Zambia, Zimbabwe. Good to have you guys on here today. London. Yeah, I just don't like I just don't like gold. You know, I don't really know how it moves. I never really liked it when I first started trading. So I just kind of get rid of it. But yeah, we'll be going over GU. Alrighty. We'll give it like 2 more minutes, guys. Don't worry, I will get into the charts. Just a quick couple of announcements. So for those of you who, and this is kind of like an old announcement, but the Smart Money Supply and Demand Crash Course, for those of you who are currently in our VIP program who don't have access to that within your dashboard on our website, for some reason we are experiencing a couple of problems. So if you don't see that, reach out to me. I'll be happy to get that fixed for you. We're trying to work out some kinks, but that should be given to you guys for free. For those not in our community who wish to have a more in-depth view of essentially exactly how we trade step by step, that is available for purchase. So if you're interested in that, just let me know. I'll be happy to talk to you more about what it's, it's involved, what is being talked about within that course and stuff like that. Let's see. We got Kenya, we got Texas. Nice, awesome. What I'm going to be doing is, quickly before I forget, I'm going to be dropping our track record within the live stream today. It is April 1st, so I just finished up compiling all the data for March's track record, and this is for the live streams. So everything we go over on the live streams, whether that be Wednesday or Saturday that we hold them, we have a separate track record for the live streams, and then we have one for our VIP. So I'm going to be sharing both with you today. They are available. You guys can, I'm sure I've posted this before, but just in case anyone who doesn't have it, it is right there. You guys can go check it out. I just document everything. Not all of them are actual signals. Well, they're not signals. In our VIP, we don't do signals. However, every single piece of analysis that we send out, I just put it in the spreadsheet just to document it. Not all of those I actually take myself. I'm not taking, like, I don't know how many trades there are, probably like around 50 or 60 or 70 trades. I'm not taking that amount of trades per month. But I just like to track everything just in case, people are taking things here or there or whatever. Just the general over, total return on average that you could see utilizing, all those trade ideas. So wanted to provide more transparency. I used to do full, what we call audit videos on YouTube, essentially breaking down everything that we sent in the Discord and then going to the charts and seeing what happened with it. Was it still valid? Did it hit take profit? Did it hit stop loss? Everything involved. But those videos were just 2-3 hours long, and it would just, and no one wants to sit through that. I wouldn't even want to sit through that. So that's just why I'm going to do the spreadsheet. Makes it a lot easier for you guys to keep up with whenever you guys want. Let's see. Alrighty. Oh yeah, prop firm automation service. So this is where the giveaway is going to come in. I guess I can kind of go over it now. I'll go over it a little bit later again. So the giveaway is not actually going to take place today. It's actually going to take place in 2 weeks from now. We're actually going to be holding a live webinar or live stream, whatever you want to call it, for our psychology session. So a lot of you, I had a little mini psychology session, I think like a week ago after a live stream, and it did really well. A lot of people really liked it. So I think what I'm going to do is do a webinar for it, kind of go over everything about psychology, because it's so important that people understand how psychology affects your trading. And in all reality, I talk about this within the course, the 80-20 rule. 80% of your trading success really boils down to how well you can manage your emotions, how well you can manage your psychology. 20% is just understanding the concepts and applying it within a system, right? Volume is very low. It might just be on your end. I'm not sure. If you guys are experiencing the same problem, let me know and I can try to do something here. But yeah, so essentially the giveaway, I am personally going to be buying you guys a challenge. One lucky winner. I'm going to be buying you a challenge, a $100,000 challenge, and passing that challenge for you. So the giveaway is essentially you're going to be getting a free 100K funded account. If you guys are already a part of our prop firm automation service, you might be asking, well, I already paid for it. Well, what if I win? Well, there are 2 options in that regard. We're going to buy you another one and pass another one for you, or I'm just going to send you essentially a refund for the one you've already paid for. So don't worry if you already are a part of the prop firm automation service. Don't worry if you win, then you're still going to get rewarded for that. I don't think anyone has ever done this before. I mean, I'm pretty sure people have given away like 25 or 50K challenges to where those people will then have to go and pass it. But I don't think anyone's ever given away a 100K funded account before. So it's pretty cool. That's what we're going to be doing. There's going to be a ton of people partaking, but you could be a lucky winner. Really could change your life, to be quite honest. All right, let's get into it, guys. So we have a lot to go over. What I'm going to do is I'm probably going to stop a couple of times just to take some questions for like a couple minutes. So I have 21 pairs I'm going over. The reason why I go over so many is because it's a weekend. I want to prepare you guys for the upcoming trading week, but also at the same time, a lot of you trade different pairs, right? Not everyone trades Euro GBP. Not everyone trades GBP JPY. Not everyone trades NZD CAD, right? But for those of you who do, I want to be breaking down those charts to help you guys have an understanding of what to expect going forward. All right. I'm going to share my screen and I'm going to stop every 7 pairs. I'm going to do 7 pairs. I'm going to stop, take some questions, go to the next 7, and then we'll finish off at the end. All right. So let's see here. Here we go. Can you guys see this? Is everything clear? Can you hear me? Can you see this? Again, I don't want to be talking to a wall here. Make sure you take notes. We have a lot of great setups for you that are forming this week. So be sure that you write down, like, if you don't have your computer on you right now or your phone or whatever, write down the pair, write down the price, in which I'm going to be talking about areas of interest. If you have your computer, you guys can just pull up TradingView or whatever you use to mark up charts on another page. So when I go over a pair, you guys can mark it up the same way if you want. Totally up to you, whatever you feel is necessary. So just drop a yes in the chat, of course, because I can't see the chat as I'm sharing my screen here. Just drop a yes, and then we'll get started. Just want to make sure that everyone can see fine. Okay, cool. So I'm going to blow this up here. All right. All right, cool. So let's get right into it. Sweet. So we have 21 pairs. We're going to do 1, 2, 3, 4, 5, 6, 7. So we're going to stop with EG. So we're going to do AU, and then we're going to finish off with EG, and then we're going to take some questions after that. All right. So with Aussie US dollar, honestly, guys, I really don't look at the dollar index too much. I really don't need to, because really what's going to tell me what AUD USD is doing is AUD USD itself, right? The dollar is good for just a general bias, but if you look at the dollar index right now, it's just a little choppy. It doesn't really make much sense. We really could go long. We could go short. It really just depends on what it wants to do. Because it's higher time frame bullish, but lower time frame bearish, but also lower time frame bullish. So it's really just kind of crazy. However, with AUD USD, I do favor more dollar strength in this sense, because I want to see AUD USD go short into our overall objective of 0.6550. So I actually was on a one-on-one call with one of my students yesterday, and it was a really, really good call. And we went over the kind of the psychology behind lower time frame trading, and the fact that not a lot of people who experience success, those people have a commonality. And that commonality is the one that you don't scale out. That's the issue. Now, you can have a great setup. For instance, let's just say, for instance, and I'm just going to do this very quickly. Let's say you have a distribution schematic, and then you have a failure to generate a higher high here and a lower low, and you're looking to pull back into that supply region to short off. Now, if you have that tunnel vision and you're just looking at that time frame at that particular area, that would ultimately look like a really good setup. And it does. The concepts are there to make it a good setup, right? We have the distribution, we have the failure, the demand that flipped to supply, we have the break of structure to the downside. All we need is the pullback for the continuation. What we went over on that one-on-one call was the fact that price actually did come into a higher time frame level to the left, which makes this entire thing valid. But what if it didn't come into a higher time frame level? What if the higher time frame supply was like right in here and we had room to go to the upside? Well, we wouldn't be taking this trade, because we have to zoom out every single time. We have to zoom out every single trade that we are looking to take. We zoom out and see, is this following the higher time frame structure? Are we following higher time frame objective points? That is the most important thing. You have to get in the habit of doing so, because you can have the most beautiful trade, but if you're not zooming out, you could be the concepts that you're trading may look good, but it may not be in the right area, right? You may be trading in the right direction. You're just not getting the right timing with it. So price, therefore, since this is the higher time frame objective, let's just say, goes like this, maybe mitigates, but then comes higher, hits your stop loss, and then starts to fall, because that was the real level in which price needed to come into. right? So that is why, just because we have a beautiful setup, or just because you guys only like to scalp or intraday trade for some of you, and who only trade for the session and maybe not for, you know, the higher time frame, that's okay. There's nothing wrong with that, but you still need to zoom out. You can't just trade within the session, and I can't just like zoom in here and just look at like the 5 minute and see, okay, what is exactly going on in here, right? Because I could see something like, I don't know, in a 5 minute time frame or 15 minute, I could see this as a quote unquote break of structure pulling back into supply. But what I fail to realize is that could there be something up here that is an objective point that price could actually push up into before falling? Because this is simply just an overall retracement. You get my point though, right? That this example is not a good one because that's not what I expect to happen, but that's what I mean. We have to be able to zoom out and be patient as well. So anyways, AUD USD, let's keep that in mind as we're going through these charts. Okay, it's very important that we keep higher time frame objective in mind. So I'm going to make a conscious effort to kind of go through these pairs, you know, one pair every like 5 or so minutes, just so I can get through everything today. So anyways, higher time frame objective, let's just take a look at the daily time frame. You know, we are currently bearish, right? Yes, we are bullish, but right now we are currently bearish. We're in this pullback phase. So we're looking for shorts, right? So that we have to ask ourselves the question, if price is going to go long, where should price go long from, right? Because if price is going to go long from, let's just say our region in here, or maybe down here or whatever, well, if we're looking for short, then our bias is still correct, even though it's a counter trend opportunity, right? So we can still take advantage of counter trend trading as long as we have room to go in the direction in which we're trading before higher time frame objectives are met. So this is a higher time frame demand. I'm not going to go through the top down. I've kind of already went through this before. But anyways, this is our prior supply zone. And this reaction from this prior supply zone was that failure to generate the lower low within this overall downtrend. And that's where we stopped and made the higher high and started to push higher. Okay, so this will be that region in which price needs to come down and mitigate. So we have an imbalance in here, right? We have that imbalance. We have that area of demand. So we want at least 0.6550, potentially 0.65, even lower, 0.64, but at least 0.6550. And we can see we have not hit that. If you want to go retail here and see it from a retail perspective and give you added confluence within your smart money system, you can pull a trend line from here to here, and you'll see that if I go down to the 1 hour, just extend this, make this pretty. All right, so that's about right there. 1, 2, 3, 4, 5 touches. So this is telling me that retail is probably involved long within this trend. But we already know we're looking for shorts. We have an objective point down here. There's tons of sell side liquidity resting below these lows. So I want to continue to sell. And this is exactly what I mean by tunnel vision. They look at it from a trend line perspective, but fail to realize we're bearish. We're absolutely bearish right now. This is the prior supply zone, and we're still holding these trades. It's just taking a little while. But this is this area of supply, and then at a lower time frame level here, this is the high that created this lower low. So when price goes like this and then doesn't make a lower low and makes a higher high and starts to go like this does not mean we're overall bullish. It just means we're experiencing a higher time frame pullback within the higher time frame expansionary phase. This is one expansion. So until we break this structure here, we're still bearish. So I don't care if price makes a million higher highs and higher lows. This is still in a bearish range here, right? Because we've made a lower low. This is essentially a lower high for a lower low. That's what we're looking for. So we've come up into our 2 levels of supply. So that's why we had those trades, and we sent those out mid-March, I believe. So a couple weeks ago. But anyways, we mitigated those. We came up into our last point of return, and the counter trend, we can see the high, the low, the high, the low, the high, the low, the high, and then we made a lower low. So we've made a lower low after having reacted off of our areas of interest, aka that higher time frame objective point. So now lower time frame opportunities to trade short into the higher time frame objective would work. Now I don't want to see price come higher than this, and if it does, I would just have to kind of reevaluate. Not to say that we couldn't go like this and like wick above it and then push back down. Sure, that's a possibility. It wouldn't be a break of structure even if we did take out this high, because it would just be like a wick high and then we would push back within the range. That's something that could happen, but that's not what I expect to happen. And if it happens like that, then fine. You know, I'll lose these trades, and then if price goes like that, then we'll find another opportunity to get back in for shorts, which would be more highly probable at that point. But anyways, so when the price made a lower low, I had this area of supply because, right, we had a high, we had a low, we had a high, we had a low, high, low, failed to make a higher high, lower low. So that was that flip from demand to supply. And then we had a lower time frame area of supply upwards of this area in here. So currently sitting in profit on both positions. Stops are still going to remain at the previous high because we could run Friday's high before falling. Just depends, who knows, come this week. But ultimately, I expect further downside. I don't have anything new in terms of like an actual setup on this at the moment. But what I'm looking for is this counter trend to be broken here. Let's just say we go like this and price falls, right? So this demand is valid because we came into it and made a higher high. This demand could potentially be valid if we make a higher high. If not, and we roll over and make a lower low, then that demand would flip to supply, and that way we would look for pullbacks to get into short. So I am looking for overall shorts into 0.6550. It's just a matter of what the market is going to show us at the beginning of the week. So I'm not going to force anything, but that is my overall bias. Do be looking for shorts here on AU, in my opinion. CAD JPY. So what's interesting about CAD JPY, and especially about the yen in general, is that it's a little tricky in terms of its higher and lower time frame market structures. So let's take a look at the 4-hour time frame, and I'll show you what I mean. Currently, right now, we are bearish, right? Lower low, lower high, lower low, lower high, lower low. We could make a lower high for a lower low. We haven't come into 93, which is the prior structure point, right? We did take out a previous low, right? So we swept liquidity, and then we had a major like follow through reaction from that. So that could signify that we may see a deeper pullback, but that doesn't mean that we should just be looking to buy it. Just because we broke this counter trend structure in here, we have to look at the way in which price is being delivered, right? So price is being delivered in such a way that this could act as just a beautiful trend line to be broken and then to sell off again, right? The break and retest traders could come in, and then price could just fall, sweep liquidity. So essentially take buy side liquidity. This could just be one overall retracement for a continuation. We are still bearish on this, so we have to just be careful. However, we did sweep liquidity, and we do have an area of supply right in here. This is an area of supply that I want to see price come up into. So around 99.5, maybe around 100. That could be something that we see. So could we potentially, because we came up into a prior supply level, we failed to make a lower low, we made a higher high, that will turn into demand. Could we possibly pull back into that demand to go long? This would just be more of a deeper pullback into our supply to then potentially look for shorts. Yes, that is a potential opportunity right here. But we have to just understand that we're still overall bearish. So yes, we could see this as a break of structure to pull back and go long, at least just until our previous supply. But we also have to understand that we're bearish. So could this just be a buy side liquidity run for then a continuation lower? Yes, that's something that could also happen. So it's just a little tricky at the moment. And when we're getting into this sort of feel and the theme across the board, when higher and lower time frame structures are not in alignment with each other, then what we want to do is potentially look to hedge. So in this case, I would potentially look to hedge a buy with a short from this level. Stop loss would either have to go below that low here or below that low here, and then take profit would obviously be at that sell limit, and then that stop loss would have to go above the high. So that's a possibility. That's what you could do. I'm personally just going to sit on my hands for the time being because I do think we can see further downside pressure, but it's just a little weird at the moment. CAD Swiss franc. So if you recall from our prior live sessions, I talked about it plenty of times beforehand. We have made all-time lows on CAD Swiss franc. So this low here at essentially 0.660, right? We swept the 2020 low, swept that 2020 low with the COVID crash, and that was essentially our all-time low, right? We've made all-time lows, and that doesn't mean that we're just going to blast off to the upside. That just means that we could potentially be seeing a relief on CAD Swiss franc. And I wouldn't be surprised if we got higher prices, right? I would like to see higher prices. So let's go down to the 1-hour time frame. What we noticed was that when we swept the liquidity, we started to make higher highs and higher lows, but we never retested prior structure. This is the prior structure in here. We never came back up into this previous structure point. So that's first and foremost why I'm looking to buy anyways, just at least until that structure point at 0.6820. But also, I would have liked to have seen a higher high. We didn't do that, so we could have made a lower low, right? Because if we're in a downtrend, we're making lower lows. Just because we have a reaction from a level doesn't mean that we're going to stop and go long. It just means that, there's a possibility of it. This could have easily been a lower low formation because we're in a downtrend. So there's no way in which I would have actually looked to have bought at that level of demand. If we were in an uptrend, of course, that would have been easy, right? Higher high, higher low, higher high, higher low. That would have been an easy area of demand to buy from. I would have set a buy limit. But we're in a downtrend, so you can't set buy limits at demand zones in a downtrend, because what would you naturally expect in a lower low, lower high sequence? Lower high for a lower low. Obviously, we stopped, right? But that's where you can just wait for confirmation. We can clearly see the accumulation that occurred in here. So we saw the accumulation. We saw the break of structure right in here, preferably really right here. But ultimately, what we wanted to see was the failure to generate the lower low and the higher high. All right, so the accumulation has been complete, and we can see that we came into that level of demand to the left. So what I wanted to see, and this was a signal that we called out within our prop firm automation service. So you guys took this on your funded account. Congrats. We had two levels of demand. Well, first and foremost, had a level of demand in here. Once we broke structure, we failed to make the lower low, right? We did not do that. We made a higher high. So we have two levels of interest. We have a lower time frame level of demand in here, and then this general order block, I guess you can call it, right there. Okay. So had a tap into that level, and then we went long. So what I'm looking for on the 1 hour time frame, we'll just zoom out. This did occur around market close, so the end of the day, right? So what I would like to see, because that's the case, because this is not really an ideal time for mitigation where we had our entry, I would like to see some sort of fake out lower, whether that be in here or whether that actually be deeper down into these levels of demand, right? Because ultimately, if we just look at it from just a general market structure standpoint, really this is the high that failed to make the lower low, and that's where we broke the structure to the upside. So maybe just pushing deeper down into these levels of demand and then going long again. If you guys are not in these positions, I would keep them open. I think they're still valid for the time being. I also think that we can make higher prices. I also think that if I just extend this trend line over, we would probably reach that previous high exactly. So this is really interesting because we have a touch here, a touch here, a touch here, a touch here, potentially a touch here. So we have a lot of buy side liquidity. I would like to see that sell side run out and then continuations along to take out buy side liquidity. So I'm still interested in buys from here. So just in and around this general location is where I'll be looking for buys come next week. Chef JPY. So again, we could be looking to hedge. Remember the situation we have with the yen. We are overall bearish currently on XXX yen. If we just take a look, we still are currently making lower lows and lower highs within this counter trend, right? We could easily do that. That's something we could do. However, we are overall bullish. We have to keep that in mind. We could make a higher high. So what I'm looking for now, essentially right in here, this is the pullback for the lower low. This was simply just a liquidity run, and we could see further lower prices. Counter trend, high, low, high, low, high, low. Failed to generate that higher high. We made the lower low. The huge imbalanced move that formed as a result of that push. So that was that supply level in which I wanted price to come back up into, and it finally did. We distributed in price into that area of supply, and then we fell, breaking the structure. So I am looking for that pullback into our last buying volume or just deeper into this imbalance or something. So we're currently in a little bit of profit at the moment. So in this trade from Friday, and we're looking to roll over, because what this could be is simply just a liquidity run, buy to sell, just to continue with the overall trend of the market, right? To ultimately make that lower low, because we still are bearish right now. However, understanding that we are extremely bullish on the higher time frame, could this just be, because we sup liquidity in here by a couple pips, but could we react off of this level of demand and go long? Possibly. I would like to just be a little patient with any hedging positions that occur, but that's the sort of predicament that we're in right now with these yen pairs. So if you do trade the yen, just be careful. Maybe use lower risk because it really could go either way. If we do fall and we close below this low, then we'll have a more clear understanding of where price is likely to head. Then at that point, we will know, okay, this distribution schematic was valid. The area of supply was valid. We mitigated, we swept liquidity, buy to sell. Now we can be looking for pullbacks to continue to short. That would be more highly probable. Right now, it's just a little tricky because of where the yen is right now. I would like to see further strength before weakness, meaning if you look at the yen in terms of just like the yen index, I would like to see price push up into a level of supply on the yen. Just if you look at the yen basket, there's an area of supply before potentially shorting off. So further upside, which is XXX yen fall, before further downside on the yen, which could be further higher prices on XXX-JPY. So again, it's just a little contradictory to what we're looking at, but that's just why we have to just be careful. All right, so yen is going to be a little tricky this week, so just be careful. It might be in your best interest to just wait until we have more clear direction. All right, so with Euro AUD, we have 3 possible regions. Now let's take a look at the higher time frame. Obviously, we are in a higher time frame uptrend. We want to just continue to trade with the trend. That is where a lot of people go wrong, is that they trade counter trend because, to be honest, guys, counter trend trading, it presents a lot of easy setups. Setups are presented more pretty on the counter trend opportunities. And that is why people lose so many trades, is because it's so easy to find setups counter trend, but it's a little more difficult to find setups in the current direction of trend. That's just sort of through my experience over 6 years, kind of what I've noticed. And that's probably why I get a lot of people asking me about, because they send me setups. So like, hey, what do you think of this? A lot of it is counter trend, guys. Just take a look at the higher time frame and see, is this highly probable when it comes down to market structure? If the answer is no, right off the bat, if you can answer that in a split second, don't trade it. It's not worth it, right? We want to only be looking for longs at the moment. We're bullish. So we have there's a couple of different market structures here. And this is what I went over on my one-on-one yesterday. It's really interesting. So we have a higher time frame market structure that looks like this. We have a high, we have a low, we have a high. Expansion, pullback, expansion, right? It's not like easily seen, but just if you just take a look and zoom out, you can kind of generally see this is one expansion, one overall pullback, one overall expansion. On a lower time frame, we have expansion, pullback, expansion, pullback, expansion, pullback, expansion. Okay, so that's like relatively lower time frame swings. Now on the lower time frame, we have even more. We have expansion, pullback, expansion, pullback, expansion, pullback, expansion. This from this low to this high is one particular expansion, because this is all just consolidation. So these are not individual higher highs and higher lows. Okay, so in order to break the lower time frame structure, we need to break below here, but at that point we're still bullish because we have high, low, high. So we could experience a higher low for a higher high. So this is why I'm looking for this region of price right in here, this doji candle, that area of demand. Why is that demand? If you zoom in on a lower time frame, just for the sake of time, I'm not going to do that. But we have a low, we have a high, we have a low, we have a high here. You can see that with that green doji candle. A low, a high, and that's where we had the reaction. We failed to generate the lower low here within this counter trend, and that's where we stopped and made the higher high. We never retested that as prior support. All right, we can see we came down close to it, actually generated relatively equal lows, but we never tapped into it. What's also interesting is the fact that we're generating buy and sell side liquidity. So equal highs and equal lows. So I would like to see sell side run first into 1.612 to go long. So the reaction from the demand to keep the market structure, the low that created this high as of right now. So this would simply just be an overall retracement liquidity run for continuations, which is why I think that's still valid. If we do get a break below it, doesn't mean we should be looking for pullbacks to just sell it off. Because again, what do we talk about at the beginning of the live? Zoom out. What's the overall direction? It's bullish. So we don't want to be looking to pull back to short off. We want to be looking for overall retracements to continue long. And that is why we have intra structure, right? But we also have outer structure, or higher time frame structure, high, low, high. So if we do get a break, then we have the same concepts apply, right? it would just be sell side liquidity run, sweeping all these lows, just like we're sweeping the lows in here, area of demand, just like these areas of demand in here. So we want price to come down into these two levels potentially. So those are my areas of interest for Euro AUD. We have that lower time frame level and then the higher time frame levels in here, just to follow the overall continuations long. Euro NZD, so same sort of deal applies. If we go to the higher time frame, what we'll notice is that we are definitely in a bullish trend. We are making clear higher highs, higher lows, higher high, higher low. We are looking for naturally a higher high. We have created relatively equal highs in here. I think that these highs will definitely be run out, because if you think about it in terms of market structure, well, for one, we would automatically assume a higher high, right? But what if we don't make a higher high? Or maybe we make a higher high, but it's just by a fraction of a pip or so. Think about it in terms of, are we going to fall here? Most likely not. Why? Because does this look like a top in the market? Does this look like a high in the market? That's not really what you see before price breaks structure higher time frame. Normally what you see is some sort of liquidity run before the continuation short, right? Building liquidity prior to a level, running it, and then potentially falling. Who knows? But ultimately, we have an overall objective because we've zoomed out here. We have an overall objective within a level of supply right in here. 1.77 is really where I want price to come into, just deeper up into this supply zone. All right. So that is why we have that level. That's where price is most likely to be attracted to. Daily time frame 50 EMA, we're in our regions of price. So by the time if price does end up pulling back and then the EMA would be up in here, that would be really good confluence for continuations long. If you guys saw my 50 EMA YouTube video that I posted, you would understand how to use that. So 4-hour time frame, we're just making higher highs, higher lows, right? Just continuing with the trend. That's all we want to be looking for. Most recent swing points, we have a high, we have a low, we have a high, we have a low, we have a high. This is actually, we have 1 touch, 2 touch, 3 touch. So it's sort of like a sell side liquidity trend line in a sense. So that, I guess that's why we came down and swept it. Wasn't a break of structure. By no means is it a break of structure. Why? Well, first of all, we're bullish. Second of all, we have liquidity, so we have to just be careful. When it comes down to a break of structure, guys, just use common sense, right? Just because it's a wick below the previous low does not indicate it's a break of structure. Please do not get in the habit of thinking just a simple wick below it or one little candle closure is going to suffice. I call it a common sense break of structure because you need a common sense break. That is a break of structure. But that doesn't mean that we're overall bearish. It just means that we might experience pullbacks before continuing long, right? That's just why, again, you have to zoom out. But anyways, we swept liquidity. We pushed back up into the range. We failed to make the lower low. We made the higher high. So within the counter trend, we have low, high, failed to make the lower low, higher high. So essentially, this is the last selling volume in here before that expansion that took place to the upside. So let's scale in. 1 hour time frame, and we can see that we have supply in here. So essentially this is the level in which we reacted from supply that failed to generate the lower low within this pullback that expanded to make a higher high. So that is that flip from supply to demand. We also have a lower time frame one in here, just deeper into it. So 2 levels of interest. We have sell side liquidity. Sell side. Why do we build liquidity prior to coming into levels? Well, we need to, the institutions, if they're looking to mitigate orders and continue with the overall direction, they need to be able to place these orders all at one time. If there's not enough liquidity in the market to do so, they're not going to be able to. All right, liquidity just isn't floating around in midair. Price just doesn't move because it just moves, right? For every buyer, there's a seller. Every single solitary movement that you see on the charts is a direct reflection of someone buying and someone selling. Someone has to be doing the buying. Someone has to be doing the selling. It just doesn't magically happen. So how do you place, imagine this. I'm just going to make this up, right? I'm going to make up the numbers. Let's just say you have to place 100,000 standard contracts at that level in order to move price long. That means you need 100,000 standard contracts against you. If you're buying, you need to be buying from someone. 100,000 contracts need to be sold to you in order for you to buy it. That is why there needs to be sufficient liquidity. right? Just like if, certain, I don't know, shoes that are really highly valuable, if there's not enough supply, if there's not enough actual shoes to be sold, there can't be a large quantity of orders for people buying them because there's not enough shoes that can be bought. Same thing with liquidity here in the currency markets. If institutions are buying huge contracts, they need someone on the other side of the market to be selling to them if they're buying, vice versa if they're selling, right? So that is why they build liquidity prior to a level, so that when they sweep liquidity, everyone who is buying in here has to sell their position back to the market to then equal a closure on their account, right? If you're buying, to get out of a position, you have to sell back your position to the market. If you're selling, you have to buy back your position to the market, right? That's just how it works. So when institutions run stops and run liquidity, they sell back their position to the market. Everyone who is buying, what does that mean? Sell back their position. Now the institutions have someone to buy from. That's why liquidity is generated before levels are met. So that's the real reason. None of the trend line BS, none of the candlestick formation BS. I literally just proved the way the market works in a sense of liquidity and volume. That's exactly how it works. From a surface level understanding, just from a general, I can be able to explain it to a 10-year-old kind of understanding. That is what it is. And it makes sense, in my opinion, at least. So that is why I like to see liquidity being built up. So I want to see those lows run, price come into our levels of demand to continue long. Half risk there, half risk here, right? Now, why do I have this level drawn right here? Well, this is not necessarily the highest probable, but I mean, you can see 1, 2, 3, 4 touches. We bought to sell. 9 o'clock a.m. Eastern, or actually this is 8 o'clock. This is actually perfect. 8 a.m. Eastern Standard Time. This is New York session open. So we bought to sell. So could we possibly push back up, sweep buy side liquidity, mitigate that level and go short? Potentially. It's not as highly probable just because that's the previous week's high. We're in a bullish uptrend. We could easily run that high before potentially pulling back, if we are to pull back anyways. So if you're going to be taking that, I mean, the concepts are there. You can see the clear liquidity run, but it's not always probable in this situation because we're in an uptrend. So this could be what we call type 2 manipulation, a buy to sell to buy. Attract buyers above the breakout, take their stops, attract sellers below the breakout, take their stops, continue with the overall direction of the market, right? So definitely prefer these levels of demand, but the only way I would actually trade this, guys, is if I scale in and if we actually get a reaction from it. We can see that we have liquidity being built up. Maybe if we go like this, buy to sell, create liquidity, right? So we're at the right time of day. All this is AKA resistance for retail traders. So we buy, sweep the stops, mitigate that level, and then break counter trend structure to the downside. We pull back into supply or a sponsored candle. That is where I look to short it down into here since there is room to go, since we haven't reached the objective point yet. That's what I would be looking for, right? Because it's not as highly probable just placing a sell limit from that level because we're in an uptrend and that was Friday's price action. That's also the previous week's high. So we could go up and run Friday's high and the previous week's high before doing anything else, right? Kind of how liquidity is run to start the week. All right, so that is Euro NZD. Last one before we take some questions. Euro GBP. So of course we are still counter trend bearish, right? We're making lower lows and lower highs. I want to continue to trade with this trend until it breaks. If it breaks to the upside, then we'll know, okay, fine, the structure has been shifted. Now we can look to buy it because we are still higher time frame bullish. Or we are making higher highs, higher lows. So the higher time frame is bullish, but lower time frame is bearish. But we have a higher time frame objective, meaning this area of imbalance that I think price could come into. We have relatively equal lows, right in here. We have all this liquidity that still needs to be swept. So selling into that region, filling up some imbalance before potentially rising could be on the table. So that's why I'm looking for shorts, even though the higher time frame is bullish. But if we do get a break, right, a break above, this is the previous high that needs to be broken, not this high here, this high, because this high generated the lower low. So this is all within the range here. We could easily go like that and then fall. That's what could happen. Who knows? So if we do get a break above it, that's when the higher time frame would be bullish and then the lower time frame would be bullish as well. So that would be more highly probable. However, I still do like shorts 100%. So we have an objective down here. So at least until 8660, I'm looking to sell. So let's scale in. So we know the overall direction of the market. We know our higher time frame objective. We know the lower time frame is bearish. So now we can be looking for shorting opportunities. It's just a checklist, guys. Have a checklist right in front of your desk. Have all this stuff. Check it off. Ask yourselves the questions. That's it, right? Just keep it simple. Keep it practical, right? So here we go. This is the previous high that created this low, right? We have a prior low, relatively equal lows, kind of. We have a channel 1, 2, 3 touches 1, 2, 3. I would like to see lower prices, of course, because we have equal lows, but ultimately because we have a higher time frame objective here. We had two levels that is interesting. So let's take a look at what's going on here. This is really important, guys. This is the questions you can ask yourself to be able to understand the proper areas of supply and demand. So definitely listen up here. When you see, if you're in a downtrend, you see the high that made the next lower low. Look at the counter trend, meaning right in here. Let's take a look at the counter trend. This low made that high. This high made this low. That low made this high. This is the last buying volume before we broke structure. Okay, so let's take a look at this range in here then. This is a high, that's a low. That's a high, that's a low. This is a high. Where's the previous demand? This is the demand in here. We came into it right there. So that creates the demand here after we made the higher high. So we pull back into it, create that demand, we react from it, and we fail to generate the higher high within this counter trend. And we roll over and made the lower low. That is why I have this level. And well, I'm not going to go into why this is valid too, but this is still a valid level in here. That's why I have two boxes, right? So essentially these are the regions, not in here, not in here, not in here. These are the regions in which we need to be looking for. That's exactly why we came into it right here. That's why we're still in shorts. We're still in shorts from our top level here when we sold it from that supply, but that's for another day. And then that level there. So anyways, we created a high, a low, a high, we created equal lows. Could we, pull back before shorting off again? Could this be the high in the market? Because we've come into the objective. Could this be the finish of the overall retracement? And now we're starting to see lower prices. Sure. But have we actually broken structure to the downside? No. So could we continue to see retracements higher before falling? That's a potential. So I'm going to keep this level here, this upper box, which is right here, open for the time being if we come higher. But the fact that we came into this initial level and on the lower time frame had a type 2 manipulation, I am looking for shorts. We had equal highs, we had equal lows. Prior to the level, right? That's why you want to see these liquidity being built up. You want to see manipulation occur prior to levels, just like we went over before. We swept sell side first, enticing sellers below the Asian range. This is the Asian range. Time and price is so important. Sweeping the Asian range, enticing sellers below the low. Continuing with this uptrend, or the counter trend at least. Took their stops, enticing buyers above the resistance. The breakout traders to start New York session. Again, time and price as well. See how this occurs during Asian session, London session, New York session. The break occurred in the Asian range was formed in Asian session, obviously, hence the name. The break of sell side occurred in London. The break of buy side occurred in New York, and the continuation following the remainder of the day. So time and price is very crucial. Entice sellers, entice buyers come up into the level to the T, and then the counter trend. Let's take a look at it. Demand was met, made a higher high. Demand, for the most part, was met, higher high. Demand was met, higher high. Demand in here. Whoops, let me just get rid of all these drawings, not confuse you. We can see we're following demand. Previous level of demand is going to be in here. We failed to make that higher high, of course, because we had the sell divide a sell, but also because we came into that level, we rolled over. So that becomes our level of supply now. That's a beautiful supply zone for us. We didn't quite pull back into it initially, and we actually consolidated and then fell again, creating another intermediate level of supply. That's why I had two levels. So we actually got the reaction last Friday. This is Friday the 24th. And then we were in profit for pretty much the whole week, kind of chopped around, went back to drawdown, went back to profit, kind of just consolidating. So if you go to the higher time frame, I wouldn't be surprised if we came into our secondary level. I would prefer this level because this makes more sense than this level here, because the supply zone up here, well, first and foremost, that's more in premium, but secondly, it's the direct result of the sell divide a sell type 2 manipulation. So definitely shorts from 88320. If we push higher, we're still bearish overall because this would just still be in the counter trend. And then I would look for reactions from this level in here to look for continuations lower because we still are overall bearish. So that is how we can read supply and demand with market structure, with time and price, putting together all the confluences for a trade. All right, so I'm going to stop share just for 1 or 2 minutes. And then we're going to go over some questions. I'm going to go over the giveaway again, just for those of you who didn't hear originally. Just get back up in here. Okay, cool. So first and foremost, the giveaway. I'm going to be giving away a free $100,000 funded account, guys. Free. You don't have to pay for the challenge, and I'm passing the challenge for you. You're going to be literally given credentials for a free 100K funded account. I'm not going to say what the prop firm is. I'm just not allowed to for obvious purposes. But we're going to be holding that giveaway on Saturday, April 15th. So it's April 15th. I'm on Eastern Standard Time, so just make sure that it's in alignment with my time here. 11 a.m. Eastern Standard Time is when we're going to be holding a psychology webinar. Now, the psychology webinar, the main point of the webinar is to help you guys in your psychology, right? That is the most important thing to do. We're just going to be holding the giveaway at that time as well. So I'm not quite sure how I'm going to be facilitating the giveaway and how I want to pick a winner, but you will get updated with that throughout the coming weeks. So I wanted to give you guys that update. That's what we're going to be doing. That's really the biggest giveaway we've ever done before. So definitely very excited about that. All right, let's see. All right. This is a good question, guys. Listen up. In what situation, if one exists, would you consider taking more R on your first or maybe second TP level? So I always have just a general rule of thumb, and this is something that everyone can apply. If I have 2 take profits, right? How do we go? Okay, first and foremost, how do we go about setting our take profits? What I do is my first take profit is always the prior market structure low or high, whichever direction I'm trading. Any other subsequent take profit after that is based upon what the market is showing me. I don't just take profit based upon risk to reward. Like if I'm up a 1 to 2 or 1 to 3, I just don't take partials. I just don't do that because doesn't make much sense in the form of taking profit out of the market from a technical analysis standpoint. I take my profit from the market when price comes into a level that has a potential to reverse from my trade. So if I am overall bearish and I have all the confluences to short and I'm in my shorts, well, I just look for the nearest demand zone. Doesn't mean I'm going to be buying from demand. In no way am I going to be buying because I'm shorting, but I would be taking profit at those demand levels because if price were to reverse against me, that's most likely where it would do it. Not to say that it's going to, it's just saying if that's what's going to happen, then it would do it from areas of demand, areas of imbalance, areas of sponsorship, not just your 1 to 2, 1 to 3. The market doesn't understand risk to reward in that sense. It doesn't understand your individual position. You have to take profit based upon what the market's telling you, not based upon the numbers of like a 1 to 2 or 1 to 3 or whatever. So let's say you have 2 take profits, I take 50% off my position, TP1, and then 50% off at the second one. If I have 3 take profits, I take 33% off the first, 33% off the second, and then the 33% off the last. 4 take profits, 25, 25, 25, 25, and then you go from there, right? That's just my general rule of thumb. Now, it's going to be a little different depending on the individual trade at hand, but that's just not something that I can teach because it's going to be different for every single trade. So that you can just follow that general rule of thumb if you want. A trading competition, maybe potentially if we have enough time for it, that could be a good way for people to kind of, I want the winner to earn it. I don't want to just ask a question, first person to answer an easy question gets the free account. If you're not a good trader, you're probably not going to win the giveaway because I'm going to make someone earn it. So that's why it's important to not just be waiting for giveaways. You guys need to be learning the skill, getting education, getting mentorship, learning, practicing, getting experience. It's not all about free giveaways. Life is not a giveaway. You have to earn it. And that's what I'm going to make you guys do. All right, let's see. Let's assume price comes into your 4-hour or 1-hour zone. Do you drop down to a lower time frame, wait for a break of structure? How do you enter? So again, it's going to be different for every single trade. Ultimately, what I would do is probably place a half risk position at my overall level. So that 4-hour, 1-hour zone, right? If that level is valid, if you identify that level is valid, then it's you place it like a half risk position. If you risk 1% per trade, place a 0.5% risk on that. Because what happens if price comes into that level and then goes in your direction without ever confirming? Well, then what do most people do? They chase it. They have FOMO, their fear of missing out. Then they get in at a worse price, and then they have a ridiculous risk to reward that doesn't make any sense. So it prevents that psychology. That's why we're going to be doing this psychology webinar. It prevents that psychology from taking control over your trading to say, oh, my analysis was correct, but I was waiting for a lower time frame break. I never got it. My analysis ended up working out, but I'm not in the trade. What do? Let me just place the trade because I don't want to miss out on it. That's the worst thing you can do. So at least place a 0.5% risk. Just if that actually does occur, well, then you're in the trade. You don't have to worry about it. But I drop down to a lower time frame, and it's not like I'm looking for a break of structure right when price gets into it. What I would recommend doing is if price gets into your level, you have to look at the prior structure. Meaning, let me just show you really quick. If price gets into your level, let's just say that you don't want to place a sell limit here. You just want to wait for confirmation. Let's say price goes like this. You can't just look at this and go like, oh, we broke structure right there. No. Why? Because this is the structure. You need to wait for that to break. So sometimes, and oftentimes, guys, the initial reactions from levels are just profit taking. They're profit taking from people, right? Less buyers in the market, price starts to sell off. The demand becomes lower, hence why the sell-off in price. It's not always a direct reaction to the market to say, okay, now we're going to go short. Oftentimes it's just profit taking. So what I would implore you guys to do is be extremely patient when it comes down to looking for lower time frame breaks of structure, because they can kill you in terms of your trading. Everyone loves lower time frame trading because it's quick money. Quick money does not mean good money. Quick money does not mean guaranteed money. Quick money does not mean highly probable money at all. I look at long-term money, right? Because just applying it to how the world works, everyone is instant gratificationers. Everyone wants to be a millionaire right now. That's why everyone's broke, to be quite honest with you, because of the mindset. So same thing when it comes down to lower time frame trading. Having a long-term mindset with it, just wait for, because price would go like this, price would go like that, and then you would think that's a break of structure, so you would sell it, and then price would go like this. When all reality, what is this actually forming? Higher time frame, equal highs. But you didn't know it was forming equal highs at the time, and you were just trading what you saw in here. I would just wait until it is a crystal clear trade, right? But yes, that's generally what I look for. I look for the momentum to stop. I look for structure to shift on the lower time frames, an obvious break of structure, a clear push away from the level of interest. But sometimes it'll screw you, right? Because you'll see this as a break of structure. You'll get in, you'll lose the trade, but this is essentially over time just forming sell side liquidity to be run, buy to sell, to come back up into a level of supply to then get into the position short. But again, it's always going to be different. Every single setup of the market is going to be different. So what I can only do now for you guys is just to tell you just the general rules of thumb. So yes, half risk at your overall area, wait for a clear real break of structure on the lower time frames, and then go from there. What do you have in common the 5% who succeed in trading outside of hard work, personality, skill? People who aren't going out partying on the weekends, people who aren't drinking, people who aren't eating fast food, people who read, people who are always networking, people who are always looking to get better. Doesn't even have to be in trading, just with any skill in general, right? Taking courses on, I take courses all the time on like graphic design to create thumbnails for stuff like that. Like, it's just, I just want to be better of myself, right? So it's just outside of trading, that kind of personality. I'm not saying you guys can't enjoy a glass of wine or a beer. I'm just saying that most people aren't doing what everyone else is doing, right? What do the masses do? Do the opposite, essentially. All right, I'm going to get back into the charts, guys. We have an hour left. I'll go over the questions with everyone who has posted them that I didn't answer after I go over some more pairs. All right. So let's see, screen share. Okay. All right, so you guys can see that. Perfect. Awesome. So we did EG. We're going to do EJ next. So with EJ, same sort of deal with the yen, right? Could this just simply be a huge buy side liquidity run for continuation short? It could, because we're still overall bearish. If I just go to the 4-hour, where's the previous swing high and low? Well, I guess you could classify this as the high that made this low. This is the high that made this low. So this is just one drive, two drive, overall pullback. We still haven't broken this structure yet. If price is going to go long, price needs to break that high. We haven't done so yet. And what I don't mean is just like a wick above it or a one candle close. No, a sustained closure. Price needs to be a common sense break, right? We still could go short. We swept liquidity with this wick. We could go short to take out equal lows in here that we have to come deeper into demand. That is something that we could do. So that's just why the yen is very tricky at the moment. So that could be a way to hedge. You could be getting into this position because technically we are counter trend bullish, right? This, let's see, this is low that made this high. This is a low that really expanded this entire structure. So this is really just the general overall pullback. So 1, 2, 3. I mean, we could be seeing continuations. We accumulated in here within an area of unmitigated demand. Why is that demand? Well, equal lows, sell to buy, reprice, continue. We never mitigated this region, not even right here. So that's why we finally came down, took the sell side liquidity from this low into here, accumulated, failed to generate a lower low, and made a higher high. So this repricing here could be interesting, right? Low, high, low. Supply failed to make the lower low, higher high. This could turn into demand. We have the EMAs on our side as well. 4-hour 50 EMA, daily 50 EMA. We could be turning to the upside. However, we still are technically bearish, so we could even just turn back to the downside, and this could simply just be liquidity run, buy to sell, possibly. But this is why it's a little tricky. So just be careful with the yen this week. Euro USD. I definitely want to see higher prices. We're continuing to make higher highs and higher lows. If you recall that we talked about this level 1.0545. High, low, high, low, high, low, high, low. This is that last sell to buy, that demand level. I've already talked about that plenty of times. We came into that very nicely. Again, very, very choppy, but we finally made the move. So if you were patient and held your position from that level, you'd be in really good profit. Okay. So anyways, I want to see a higher high form. That's just what I want to see because we're in a bullish market. So what am I noticing? Well, we have relatively equal highs. We have equal highs right in here, and we have equal highs essentially right in here as well. So I want to see buy side liquidity be run, whether that be short term or long term, meaning are we going to come into this level of demand here and go long? So high, low, high, low, high. Or are we going to have a deeper retracement into a level of demand on the 1 hour? So let me get rid of all these markups. You can see we had, a clear sell-off, very strong, and then we started to trickle back to the upside. So we have an area of demand right there. We can clearly see that on the 4 hour with that doji. We are above the 4-hour 50. We are, well, not 1 hour 50. If you look at the YouTube video I create, it's really the 4 hour and the daily is what you need to pay attention to. 1 hour sometimes, if it's within an area of interest for a lower time frame entry, but we're above the daily 50. We're above the 4-hour 50. We want to continue to look for buys. I'm liking this region of demand if we come into it. However, we still are bullish from this level here. We could react from that level. However, we have equal lows. So Monday's open could go like this, and then we create a higher high. Who knows? I mean, we could sweep sell side liquidity, sell to buy and go long, or we push into here, or we have a pullback into our supply zone to short off into here before going long. It's just really tricky. That's just why, when people ask me about EU, especially over the past couple of weeks, I've just been like, I just don't know what to tell you because it's hard. It's really kind of tricky at the moment. What you could do is potentially hedge. We can see that on the 10 minutes let's look at time and price here because lower time frame, we are bearish. This is an area of supply with imbalance. We came and mitigated that Friday at 10 o'clock. So in end of London, beginning of New York relatively. sweeping the start of New York and London sessions highs. So buy side liquidity, buy to sell, we reprice, we continued lower. So I was originally looking for shorts from this level right in here if we had the pullback, because if we were going to go long, it could have gone long from here, which we haven't come into it yet, right? We had room, but now we finally came into it. So it's a little tricky. Could I be looking to sell from that level come Monday or Tuesday? Potentially, because we could see lower prices pushing deeper into this level. So maybe taking a half risk position from a short to sell down to take out equal lows to come into 1.0780, that higher time frame level could be on the table. If we get a break, well, then we'll know, well, hopefully if we get a break, we'll sweep liquidity first. But if that happens, then we'll know it's a liquidity run. The end of the pullback is done. We need to be looking for pullbacks to continue with the overall trend of the market, if that makes sense. All right. So that's why it's important, guys. For those of you who are in VIP, this will definitely help you guys form biases, because not only are you going to be getting this, the analysis like we're doing in these live sessions, but also you're going to be getting updates throughout the week and what we're seeing on a day-to-day, session-by-session basis. So if you're not in VIP, that's okay. But remember, this is all that we can do. We only talk to you guys twice a week. And after today, we won't be holding another live until May, because we're off this month. Let's see, EuroCAD. EuroCAD, we are continuing to sell off. If we look at the 4-hour time frame, let's take a look at what's going on higher time frame. What market are we in? A bearish or bullish market? We're in a bearish market, right? We are making lower lows, lower highs. We've created equal highs. We've actually created an inverse head and shoulders. We've swept the high, enticing buyers, and we've come into our prior level of supply. We could easily see a rollover. I would not be surprised if we saw that. And remember, we're looking for potentially CAD-J longs. We're looking for CAD-Chef longs. So EuroCAD's CAD strength could potentially be coming in. So anyways, why do we stop right there? Well, not to say we haven't broken counter trend yet. That's the only reason, because I am interested in shorting. However, technically we're still bullish. So could we make a higher high? Yeah, we could. We just have to be careful. Let's look at this. This is very interesting. Why this high was taken out by that high, but why was this the high prior to us stopping and falling lower, right? So we came into our last buying volume. This was that imbalance that we filled. We swept this high here, came up into this last buying volume, as you can see, right? Came up and mitigated that. And then we stopped lower time frame. Let's go all the way over here. I'm just going to show you guys the mitigation trend. It's really pretty how it works. We swept buy side liquidity, 1, 2, 3 touches, buy to sell. We came into our last buying volume here, that level of supply that hit the previous level of supply to the left that we just talked about. So now we'll look at the counter trend, high, low, high, low. Yes, this was the failure to make a higher high, but really this was the demand in here, that final demand that we had the reaction from that failed to make the higher high that ultimately broke the structure lower, right? That's where we started the whole downtrend. So that's why on the higher time frame, this is an entire level of supply. If we look at the 4-hour, we zoom in, you see that little repricing candle there on the 4-hour time frame? Let's zoom out. That's exactly where we came into to the right. Came into that level. Now let's zoom in. Now we're starting a mini downtrend. We're making lower lows and lower highs on a lower time frame, but we're still bullish. High, low, high. Look, could we make a higher high? Yeah, we could. We're bullish. So we can't neglect the current trend that we're in. So even though I'm going to be looking to sell, I may look to hedge with a buy. This could be an area of demand that price could come into prior to continuing long, right? Possibility. But let's take a look at the lower time frame, what's occurring in here. Very interesting. So again, right in here, area of, I guess you can call it an order block. Imbalance started right here. That's why we had the box there from that wick to that wick. Straight selling volume. Swept liquidity, buy to sell. Swept liquidity, buy to sell. You see how liquidity is swept before moves occur. You see how we can't be scared of volatility. This is a huge volatile move. Guess what happened? Fell right back to the downside. Huge volatile move. This is just liquidity run to mitigate. Fall back to the downside. When you get into the mindset of understanding how liquidity, volume, and mitigations and supply and demand work and how the institutions move price, you will never be scared of volatility again. That's why news doesn't matter, right? News is not random. News is perpetuating what was already going to happen anyways. It's compounding the effect. That's why news, people who trade news by itself just don't understand how the market works. So we came in, we filled that imbalance, came into that supply. We chopped around again, or maybe lower time frame distribution, and then we fell. What's interesting is we created a high and a low. We swept sell side first. What time of day did this occur? Friday, March 31st. This was yesterday. 2 a.m. Eastern time. It's around London session open, attracting sellers below the breakout of 1, 2, 3, 4, 5, 6 touches. That support that was created all throughout Asian session. We swept those lows and attracting sellers, came back to the upside, mitigated that supply, took out the previous high from Asian session, attracting buyers above the breakout, and then we fell and made a lower low. So that type 2 manipulation therefore comes in again. Let's look at the market structure. Lower low, lower high, lower low. So now where's the range between this low or that high and this low? So we want to be pulling back into this range somewhere to be looking for shorts. Well, what we notice is that this is already mitigated, taken care of. Sell to buy to sell, this becomes the new supply. That's why I'm looking for shorts from that level. Hence why EU could potentially be a short from that level as well. Euro CAD, I want price to come back up into what's the price? 4720. So that's that level of psychology, that psychological round figure. We have imbalance in here as well. We have the 1 hour 50 EMA, I believe, is right in here. 1 hour 50 EMA. 4 hour 50 EMA is right there as well. So it's starting to curve back to the downside. So by the time, if this does pull back up, this could come into here and we'll then look for shorts. But it's a really pretty piece of analysis. It makes sense. It has all the confluences. So we're looking for pullbacks to short off. So that's Euro CAD. GBP CAD. So I talked about these levels originally. Higher time frame, more bullish. Right? We're making higher highs and higher lows. I want price to come up into 1.7. That is our previous area of supply. Right? This is where, upon this huge expansion, this is the high that created this overall lower low. This is just one overall pullback. Right? We could break, or we could respect and go short. Who knows? Right? But where did the counter trend break to go lower? Where did the counter trend stop to where the expansion occurred? Well, let's just zoom in here. Well, we have a high, we have a low, we have a high. We still have equal highs, buy to sell. That's where we stopped and made the lower low. But where's the previous demand? Right in here, reacted from the demand, failed, lower low, that becomes supply. In and around 1.70000 psychological level. So that's why I want price to come up into that level. I'm not necessarily going to be selling from there. I'm just going to be looking to take profit on my buys from there. So what happened? Well, we created a high, we created a low. Overall pullback, overall expansion. We have finally taken out this high, so we have to be careful. Will this lower time frame continue? Maybe. Or could we have an overall retracement before continuations? Yeah, because we've made a higher high, a higher low, a higher high. So now that we've made the higher high, this becomes the range again. So now we can be pulling back into the range before continuing, potentially. So like I say, I'm always going to be trading with the trend until it breaks. What we have here, shoulder, head, shoulder, sell to buy, reprice, continue. This is the low that generated this high. So this is all just one overall pullback. We have equal lows in here. So this could be the sell to buy that we get into our levels of demand. One right here, and there's a lower time frame one right in there with that imbalance. So that's what we could see come next week. What is this also? Shoulder, head, shoulder. You notice where the right shoulder came into. The left shoulder. It's retail. It doesn't make any sense, right? So that's why when they're going to be probably enticed to sell below this neckline break, that's where I want to be looking for buys this upcoming week. But like I said before, CAD could strengthen. We'll see. And if that's the case, because we've made a higher high in comparison to this high here, Could we see a deeper retracement potentially into imbalance? Yeah, we could. Into demand, that's a possibility. So just keep that in the back of your mind as well. GBP NZD, nothing new about this. I mean, pound is strong. We want to continue to look for GBP NZD longs. And NZD and Aussie dollar are weak as well. So that's why GN longs are really, really good. We're still holding our trade from our original level at 94022, which is right in here. From that previous level of demand, we can see higher high, higher low, higher high, overall retracement, higher low, sweeping liquidity to make a higher high again. So in the process of breaking structure, we've come into supply. We had reactions, aka that repricing and that repricing. So we got our first re-entry, got back in the market, price came above the previous swing high. What does that tell you? Partials are taken, stops to break even. This is still valid in my opinion, because I would maybe consider this to be one expansion, right? This could just be all one expansion, one overall pullback, one expansion again for a high, low, high sequence, something like that potentially. So stops are at break even. So if we come lower, then we'll sweep sell side liquidity, come into my secondary level, stops below the low, and just continue, right? That's what we want to be looking for. And this could be in for some sort of wedge, right? Some sort of wedge pattern, wedging ourselves, and then we break, enticing sellers, and then we go long, something like that. Ultimately, what I'm trying to say is I'm looking for buys in and around 9.5 or 9.5080. If we continue lower, if we don't, well, then we're still holding this trade here at break even and this trade here at break even. We'll still make more money. So nothing too crazy on GBP NZD at the moment. NZD USD, it's a little tricky as well. We're still counter trend bullish at the moment. We're making higher highs and higher lows. Ultimately, we are bearish, right? We have made a high, a low, a higher high, and then a lower low. So could we be pulling back for a lower low again? Yeah, potentially. But right now, we're counter trend bullish. So I want to be trading with the counter trend until at least an objective is met, whether that be this supply and this imbalance, or whether that be in here, this previous supply, most importantly, this repricing before the sell-off occurred, right? So at least up into 6316 or 6350. And we're just gonna keep following the lower time frame trend. Higher high, higher low, higher high, higher low. Demand was met. Higher high, higher low. Demand was met. We're looking for that higher high now. Okay. So one of two things can occur. Because we have made a higher high in comparison to the swing high here, just by a couple pips, we haven't reached objective yet. So I still want to continue to look for buys. We are in this position here. I can see that. I think it was, yeah, it was right in here. So sort of like a head and shoulders in a sense. We sold to buy into our last selling volume in here. We created a wedge. Boom, boom. Entice sellers below the breakout of the wedge. It was really just pushing deeper into the demand. So anyone who was selling was really ignorant. We went long. So looking for continuations with the overall structure. Even if you were, I mean, if you're just trading wedges, at least trade them in the right direction of trend. I mean, come on, you're selling below the breakout of the wedge. It happens on purpose because they want you to take an opposite directional trade. So we're continuing to make higher highs and higher lows. So could we respect this structure here? Sure. Or could we see a deeper retracement before continuations? Potentially. So that's why I have this last selling volume right here to fill the imbalance. So sweeping sell side liquidity into that sponsored move for continuations long. Or we come lower into our last order block right there that was never mitigated. Because this is a low, this is a high, this is a low, this is now a new high because we've taken out this previous high. So now this becomes the range now. So it's either we respect the lower time frame trend or we respect the range, high, come deeper into it, and then go long, sweeping sell side. So that's a possibility. So I'll be looking for entries in and around those levels this week. Okay, I'm just going to finish off with the rest of the pairs, and because we're kind of running out of time, we'll take all the questions at the end. NZD Swiss franc, I really don't see much on it at the moment, to be quite honest with you. I'll just kind of give you my overall direction, which is obviously short. We've made a low, we've made a high, we've made a lower low. We're in a bearish market. So if you're looking at NZD Swiss franc this week and you're looking to buy it, don't do it. It's not worth it. We're in a bearish market. Just be smart. Common sense is sometimes just the best way to go. So we've swept buy side liquidity, buy to sell. We have that entry at the supply. We're still holding that trade. We had two other trades. When we created this sweep of liquidity, buy to sell, lower low, we pulled back into two levels of supply, one in here. Well, this is really what's called inside supply, taught in our course, hence why the reaction. Highly recommend that Smart Money Supply and Demand course. Anyways, that is another level of last point of return, that last point of supply there, which we didn't reach, but that's okay. That's still a possibility though, because if this is a high and this is a low, this is still the range until we break that low. We haven't broken this low yet. So this is still the range. Could we go like this and come up into here? Yeah, we could before a lower low. This would just be an overall retracement. That is a possibility. So that is why I'm keeping this level open. 5838 is still open for me. But because we saw a significant reaction, I thought that could we just continue with the trend? Yeah, possibly. So we had this level of supply in here, and we did another higher time frame type 2 manipulation, created a high, created equal lows, enticed sellers first, enticed buyers above this high here, and now we're starting to roll over. So if we can see a rollover, that would be really, really good. Stops are a break even on this, because if we come higher, then we'll probably end up hitting this secondary entry here. I don't really see anything of interest at the moment. We have equal lows. That's a good sign, meaning sell side liquidity, further lower prices. We had the reaction from that secondary level. We created another level of supply. So that could have been another entry there. I just did not see that. Again, sweep of liquidity, buy to sell. You can see NZD Chef loves to do that. This is why I don't trade every single pair, guys, because I understand a very specific few pairs. NZD Swiss franc loves to do this, loves to create 1, 2, 3 touches, overall retracement into a level, continuations. Same thing around here. Loves to create not necessarily 1, 2, 3 touches, but liquidity to take prior to continuations. Same thing here. In this case, 1, 2, 3 touches, sweep of liquidity prior to continuations. It's NZD Chef waves very nicely. It respects supply and demand very well. It's very pretty in its formations. So I love to trade it. Anyways, nothing new on it at the moment. Just looking for shorts. GJ, same sort of deal. Remember what I said about all the other yen pairs. Could be going long, could be going short. Well, we're still counter trend bearish. Low, high, low. This is all one pullback. Until we break this high here, we're still bearish. We have to break that high first. This is just an overall retracement, in my opinion. Could we go lower? Potentially. That would still be low, high, low. We're still bearish until we break that high. Why do I want to continue lower? Well, first and foremost, we're still bearish. Well, lower, low, lower, high. But secondly, we formed a wedge. Wedge here, wedge here. When we broke out, normally we don't just continue like that. When you break out of a wedge, it's usually a fake out and then the continuation, right? To take liquidity on the other side of the market as well. We also have an unmitigated level of demand on a lower time frame down in there around 155. So that's why I want lower prices. Take profit on any shorts would be 155. However, we're still maintaining bullish structure here. High, low, high, low. We're looking potentially for a higher high. So that's why I said, could it be okay to hedge? Yeah, sure. You can be looking to buy here. You've come down into, what's interesting about this is that we've created a higher high, created a higher low. Same thing here. Higher high, higher low, higher high, higher low. Where is the previous structure point? Well, this is our last sort of repricing event there. If you just zoom out and see, where would price come into? Most likely going to be within this range here, because that's our last selling volume before we expanded. So within that range on the lower time frame, that was that last selling volume before the expansion took place here that ultimately made the higher high, right? So that's why we came into that very nicely. We swept liquidity and now we broke structure. So could we pull back into demand? There's also a demand, I think, like on the 3 hour. Yeah. So demand in here and demand in here. So boom or boom, one of those situations. Sure, that could happen. But like I said about being in still a higher time frame downtrend at the current time, could this just be a liquidity run for continuations lower? Having the fact that we came up into supply here, had that mitigation with this huge buy to sell. So this could technically be that area of supply that price comes into to then short off here. Liquidity run, oops. Liquidity run, continuations into the low. That's a possibility. right? So that's why we have to be careful. And if we buy here from these levels, use good risk management. You can do so, but just make sure that if you buy it and you lose, then you know that price is most likely going to continue short, and that where we can pull back and then get a more highly probable trade, because now we'll have more confluences on our side. So again, just be very careful with the yen. UJ, same sort of deal. I still want sells from our overall level of supply. I've talked about that plenty of times. We haven't reached it yet. We've kind of broken the counter trend. We have equal highs here. I do want to see higher prices. So hence why, the potential short on EU, the potential short on AU, the potential long on UJ. But again, could this be a liquidity run for continuations lower? Possibly. We did sweep sell side liquidity right here by a few pips. We did react. We failed to make that lower low. We made a higher high. So could we be in for a counter trend push up into our supply? That's a possibility. So buys from 131.76 would be valid in my opinion. All right, a couple more. NZD CAD looks really, really good. I don't really have anything new on it. I guess I kind of have a couple of areas that we could be looking out for. But essentially, same thing with NZD Swiss franc, lower low, lower high, lower low, lower high. What are we looking for? We're looking for a lower low. We're at least in this counter trend pullback. Okay. So 1 hour time frame, we have two levels here. We had one here and one here, our last buying volume before the huge expansionary move occurred. So we came up into both those levels, had the reaction. Now we're breaking structure lower. If you wanted to I wouldn't have classified this as a real break of structure just because it's really just a wick below it. But the fact that we had the reaction from our objective points, you could have scaled in and potentially have taken a trade off of our last buying volume here. You could see the distribution that occurred. Distribution, failed to make a higher high, lower low, that creates the supply. That's where we came into this level here beautifully. And on a lower time frame, we distributed again. You can probably see it better on like the 5-minute distribution. Failed to make the higher high, lower low, that creates the supply, entry there. Okay, and continuing, counter trend here, high, low, high, low, high, low, failed to make the higher high. It's just the same thing, just zooming out with a different perspective. Failed to make the higher high after coming into demand, rolling over, making the lower low. That's why I have that box drawn. So let's look at the 1 hour. So now we're making lower lows and lower highs. We talked about this region of price. There's like a little doji candle in here. We wanted that for a signal on our prop from automation service, and we did get it. The lower range of the signal was 8525, and we came up into that pretty much to the T, had a little bit of drawdown, but nonetheless, it was in great profit. TP1 has been met. However, if I just make a little ray right here, this is ultimately where I wanted price to come into at the start of this 1 hour supply zone. We didn't reach that. Even though we got in on the signal, we swept equal highs here, buy to sell. We didn't quite reach that level. So that is why I would probably be okay if price came up higher into either that level or the secondary level that we have here, and then shorted off from either of those regions. This would be a liquidity run potentially, buy to sell, right? So I would classify this as one expansion. So if we break structure, it doesn't mean we're going to be pulling back to go long. It just means that, this is the high that made this low. This is the high that made whatever low that forms, right? And then we could act as liquidity here, overall retracement continuations. This is why I still have these two levels of supply here. Why I have this level here, which is this risk to reward, and then I have this overall level here. So even though this was the signal, if price comes back into this region again, I will be looking for shorts again. All right. So that's really what I have at the current time on NZD CAD, AUD CAD. Same sort of deal. I don't really have anything new. The whole time we were looking to sell. All in here, when price was in here, we were looking to short. We've come up into a higher time frame level of supply. We swept a prior high, which is aka liquidity, and then we broke the counter trend. We failed to make a higher high. We made the lower low. We pushed up into that supply zone. Didn't quite come up into deeper into that lower time frame supply, but anyways, continue to fall, and we can just continue to trade with the trend. AKA while we had these two levels of entry, there was like a lower time frame entry. There was one right here, which is why we had this risk to reward. And then another one right there, which is why we had this risk reward. So we're still in those trades. And it's a more of a long-term trade, but this is going for a 1 to 6. This is going for a 1 to 19. This is a beautiful trade opportunity, and I think we're going to hit it. I mean, imagine making 1 to 19 in a trade. You just have to be patient, right? You have to build confluence around your trades. But overall, we're looking for shorts. We've created equal lows. So every single time a swing occurred, I'm looking for pullbacks to short. Equal highs were run, buy to sell. Counter trend was broken. You can see this counter trend was broken to the downside after liquidity has been run, buy to sell. Structure was broken. The reason why we had this trade right in here as we did, and we made money on the signals with prop firm automation, literally giving you guys free trades that you can have on your guaranteed funded account, which by the way, I think we did, where's the numbers? We did anywhere between, I think I posted it in the group, anywhere between 4 and 4.65 R, just depending upon, I say R because depending upon what you risk, it's not always like 4 to 4.65%. Because you may have risked 0.5%, you may have risked 2%, you may have risked 1%, who knows? So we say R. Anywhere between 4 and 4.65 R on funding pips. And then if you had a Nova account, then anywhere between 6 and 7% R, or 6 and 7 R. So that was one of them. Equal lows. These are equal lows. What is equal lows? AKA sell side liquidity. So when price was in here, did we take out those lows? No, we did not. I'll just extend that over. We had not taken out those lows. So any pullback into a prior level of lower time frame supply would be valid because we're going to continue to follow the lower time frame supply zones until at least the liquidity is run. Why would we not want, if price came into the sell side liquidity and then pulled back, why would we not want to sell that anymore from that level? Because that would be huge liquidity being run. And at that point, it would be a lower low. So could we expect an overall pullback before continuing potentially? Yes, which would naturally hit your stop. So that's just why you have to zoom in and out when it comes down to your trades. Just because if price is down in here and price starts to pull back, is this a valid level? When you're having tunnel vision, just looking at that particular area, it looks good, but is it? Zooming out, no, we have clear equal lows that were run very swiftly. So that would not have been a good trade. But in this case, we didn't take the lows out yet. This low did not take out the equal lows, which is why on a lower time frame, when price started to retrace, that would have been, it was a beautiful trade. Equal highs as well, buy to sell, and then we continued lower. And then we created equal lows in the process as well. So that was ACAT. I don't have anything new on ACAT at the moment. I mean, what we could see potentially are continuations from supply. But again, we've finally taken out those higher time frame equal lows. So could we see a deeper retracement now? Potentially. So that's why I'm just going to sit on my hands for the time being. AUD, NZD, higher time frame. Again, just like AU on the higher time frame, just like ASHEF on the higher time frame, we have come into levels of demand. Higher time frame demand, higher high, higher low. When we came into that last selling volume, what did we create? Type 2 manipulation. Equal highs, equal lows prior to the level, enticing buyers prematurely, coming down, running their stops, enticing sellers, and then running their stops and continuing with the overall bullish market. So we're running lower, but we're creating like a wedge right now. Equal lows and then 1, 2, 3 touches of that trend line. So I would like to see some sort of manipulation before going long. My bias is long, right? We're in a bullish uptrend. We have a couple of levels that we could play off of. But I want to see manipulation first, whether that be buy to sell to buy, just like we did here, buy to sell to buy, or whether that just be a clear of the equal lows, sell to buy, and then take out buy side liquidity and continue. I do think that we will continue. I still have this level here. Wow, what is it? 1.1240 on the table. That's the prior level of supply. I do think we can reach that higher time frame, or like long term. So why do I have these 3 boxes? Well, this is the expansion that broke the structure. This is the last pullback that failed to make the lower low that made the higher high. So I'm just looking at general areas. Now, what I won't be doing is placing limit orders from them because they're higher time frame and the risk reward probably wouldn't be there. Plus, I'm not really a position size trader anyways, a position holder. I'm going to wait for reactions from these levels. So let's go down to a lower time frame, and what we'll see within the first one. Remember, this is the last selling volume that made the overall higher high, as I just showed you higher time frame. Well, everything in here is mitigated except for this level in here. We have equal lows. So let's just say that way over to the right when price finally comes into it. Remember, we had equal lows, we had the wedge, right? Price is like this, way over to the right. If price goes like this, creates a counter trend, accumulates into this level and breaks structure, then yes, then we can be good for pullbacks to continue long. If we continue short, well, then there's another level of interest I have. I have this hourly area of supply, demand. Why? Why is that demand? Well, when we bought to sell, we repriced, we continued, so that within the type 2 buy to sell to buy, this is your level of supply. So essentially, lower low, lower high, lower low, lower high. That was this level of supply that we should have, we shouldn't have, because we've come down into that higher time frame demand. But you get my point. Based upon a market structure standpoint, we should have created a lower high for a lower low. So we had a reaction, failed, made the higher high. So that is a mini level of demand. And then ultimately, right in here, this is your overall demand, that last point of return before structure would be broken if we come any lower below that low. So that's why we have this level there. So I'm going to be looking for reactions, definitely looking to long AUD, NZD, not only because of the levels and the structure, but also because of the retail patterns that are forming, right? Retail is going to be enticed in here. They're going to be tempted to take positions, and then they're going to get screwed over at some point. And I'm just waiting for that to happen. 80 Chef, very similar to 80 CAD. I don't really have anything new on it. I'm just kind of going over the trade that we took. Ultimately, again, higher time frame, we want to come into 5.8 or 5.980. That is our prior repricing on the higher time frame from 2020 crash. Huge sell, huge buy, reprice, continue filling up the imbalance. That's why we want to come lower. We're in a downtrend. We need to continue to look for sells. I don't really have anything new. I did send this out as a signal yet again. Did get in both of these positions. I think we closed out at like a 1 to 2.2 or something like that, just because of the rules that are associated with the funded account. Kind of have to take profit relatively quickly. But anyways, we are respecting structure very well. This is an overall pullback, in my opinion. I think now is probably the time we continue to make a lower low. So lower low, lower high, looking for a lower low. So let's see what's going on in here, and let's follow the mitigation trend really quick. So let's head over to the 15-minute. When price broke structure, right, we're making higher highs, higher lows, higher highs, up, lower low. This is the previous demand. You guys can see that demand, right? Clear as day. We broke right through it. So what we call, again, the inside supply, or now supply, inside demand. We pulled back up into that region, had a reaction. That's why we started to go short. We talk about inside and outside supply and demand in our courses. Very, very important concepts to learn, ladies and gentlemen. Anyways, when we come up into that level, I wouldn't be selling from here, because technically we're still bullish. So could price, could have come higher? Sure, it could have. But this is all hindsight, right? I'm just looking at it in hindsight. So we can see the supply was met. This supply in here was met here with the liquidity run, buy to sell, mitigation, right? Now let's zoom out and continue. So the new supply was created, finally came back up into that, then lower time frame, last buying volume supply there, last supply here, last supply here. And that is why when price made a low, a high, we swept liquidity, buy to sell, lower low. This becomes the new range. So we look for shorts from the inside supply and then the outside supply, which is right there. That's we had one entry and two entries, and then we went short, right? Just missed 0.61, which is our first take profit, which was like right there. Came back up. This is simply just enticing buyers into the market within pullbacks to run, but we're in a downtrend. We can't be scared of volatility. So that's why I specifically said within the signal service, I'm like, well, I'm going to see what New York session has to offer. I'm not going to be taking profit, right? And that's exactly what happened. New York session, it was just simply just, a reaction from the level, big retracement, and then just the continuation. That's what we're seeing now. So what am I trying to say here? I'm trying to say, I'm looking to short Aussie dollar, or excuse me, looking to short the Aussie dollar. I'm looking to short the New Zealand dollar. I'm looking to long the Great British Pound. So A-Chef shorts, AU shorts, potentially AN shorts, N-Chef shorts, N-CAD shorts. We're just overall bearish. We want to continue to look for setups. At this current time, there are no setups. What if we do this? What if we, go like this. Could we be looking for shorts at that point? Yes. Liquidity run, buy to sell, lower low, pulling back, maybe form liquidity, buy to sell in there to mitigate. Who knows? That could form, right? I had no idea that this was going to form. This formed Wednesday of this past week. So like 3 days ago. I had no idea what this was going to form, and there was no trade set up at the current time. But now that it did form, I can take advantage of it because I know what to look for. So right now, ladies and gentlemen, I don't see anything new on AUD Chef, so I can't give anything new. But what I can say is that something like that, if that does form that I just marked off, that would be something you would look for continuations. So again, I'm just trying to help you guys with directional bias here in that sense. Last one, Euro Swiss franc. This one was a pain in my rear end, to be quite honest. So continuations lower are what we expect. You see this horizontal ray is pretty much the last buy to sell volume in there. I didn't sell it from there. It's just in hindsight, that's where we came into. So I just marked that off. But in here, we created a wedge. Huge buy to sell, and that's where we started the downtrend. I do think we can see lower prices because we are in a higher time frame downtrend anyways. So anyways, here, we've already talked about this before, but quickly, on every single solitary level of supply, we've had reactions from. I'm not going to get into the individual supply levels, but if you zoom in, if you want to go back on EuroChef and look at it yourself, you can. If you scale in anywhere between like the 15 and the 5 minute, you can probably find supply levels that have been mitigated every single which way. So anyways, where is the previous level of supply? Well, when we came up into supply here, it swept that high and then created a lower low. Well, this is the new range. And I saw on the first and foremost, the daily time frame, that was an area of supply. So that was one. That's why we had our first entry there. And then secondly, on a lower time frame, we had our buying volume right there. So that's supply. So 1 and 2 levels, we came up into both of them, and then we had re-entries. So we had one. I'm actually going to get rid of this. We had one right here because what do we do? High, low, high, low, high, low, high, lower, low. Okay. Into our levels of supply. We already know that we're bearish, higher time frame. We swept liquidity coming into supply here, lower, low. We came in and mitigated our levels of supply here. Then we broke counter trend structure. So now we can be looking to get in off of confirmation. So the individual who asked about confirmation and lower time frame trading, that's what I would look for. We look for the break of structure. We had one level of supply here, and we had another level of supply right there. And it's better seen on the lower time frame. But anyways, we came up into it. We chopped around. We had one final, if you can see here, one final run buy to sell. So what we could see potentially come next week is a mitigation of this supply. That's a potential. So that we could see that. Ultimately, I would like to see a rollover to the downside, but it is a little tricky price action. It's a little whack right now on eChef. But you guys can see my reasoning behind that. All right, that is all that I have, guys. Again, we're holding a psychology webinar in 2 weeks. So April 15th, 11 a.m. Eastern time. I'm going to send out the link for that. I'll actually just do that right now while you guys are on here. It's important that you guys have that saved because that's where we're going to be doing our giveaway, in which I'm going to be giving away a free $100,000 funded account, not a challenge. So I'm not just buying you a challenge. I'm buying you the challenge and passing that challenge for you. So you can have a funded account. So let's go. Let me get this link here. There we are. So keep that, save it somewhere on your computer, on your phone. That's what we're going to be using for the webinar in 2 weeks. Aren't you forced to take lower time frame trades if you're supposed to make 10% in 30 days for a funded account challenge? No, I mean, I can make 10% in a month's time is a long time. I can make 10% in a month without having to trade lower time frame. I just trade how I normally do. You don't have to trade lower time frame. I mean, I went over a lot of trades that accumulatively, they were higher time frame trades that could have accumulated to 10% return. Let's see, what else do we have? Best book for psychology. The Power of Now is good. I don't really read too many psychology books. Psychology is best learned through experience and failure on the charts. And I've created a course on that. I've created YouTube videos on it before. The Power of Now is really the only one that I've actually read. That's a good one. Any other book on psychology, I'm just not too big on. Yeah. I'm very, very sorry because I know a lot of you guys are international, so I'm sorry if I mispronounce your name. Morris Laka. Sorry, I'm not good with names. He said, guys, do you realize that this EG breakdown is everything, especially from Wednesday live session? Yes, it is everything because it goes over pretty much the entirety of all the concepts that we teach. Higher time frame trading, higher time frame objective, lower time frame structure, higher time frame structure, intraday swings, supply and demand, higher and lower time frame, in time and price, type 2 manipulations into levels, repricing events. I mean, it goes over everything. And I go over it. There's no like step by step what you look for. Nothing is ever step by step because trading is not a science. Everyone and their mother is trying to look for something that's easy, that's a step by step. It's not how trading works. Everything is going to be different. The concepts will remain the same, but putting them together for each individual trade setup is going to be a little bit different every time. But it's understanding the concepts in practice. That is why it is required that you have experience with trading before you can get good at it. Everyone everywhere is looking to take courses that will immediately get them to profitability. Right when they join a group and they're not profitable in their first month or two, they quit. Worst mindset to have, because what they don't realize is that they're going to head to another group, pay more money for a service just to continue to fail with their group for a month or two, head over to the next group and continue to do that. The same applies. You have to stick with one strategy and master that over years of experience. If you're not willing to do that, this industry is not for you. It's really not. So same thing with what you said, right? You know, it's everything, right? It's putting together all of the confluences to form a trade setup. When your confluences are met, be confident to take the trade. If your confluences are not met, don't take it. You don't always have to be in a trade every single day, every single week. The fear of missing out when it comes down to trading is real. If you haven't been in a trade all day or in 2 days or 3 days, you're getting anxious. And you guys know what I'm talking about. You get anxious. You want to pull the trigger and get into something. If there is no trade to take, you do not take it. You have to get into the mind of a professional trader. You have to do things professionally, or you will just end up losing it all. I guarantee it. It's just how it works. And failure is the true teacher, right? Me sitting here sugarcoating things to make you guys feel better is not going to help you. Me being real with you and giving you what you truly need to understand is best. My mentor was super hard on me. Hence why you can probably see my tone of voice. I'm hard on you guys, right? It's just because that's the only way that I learned, is I went through the freaking trenches to get here, in a sense. So it's tough, but it's possible. I am not the most intelligent person in the world whatsoever. I went to public school. I got a public school education. That's it. I'm not a smart guy. I didn't really read growing up. My vocabulary isn't strong, as you guys know. So I'm like everyone else. I had a 9-to-5 job back in the day. I was just a normal person. So I'm not anything special. I'm just a person who did the right things. I did the little things right. I stuck with it. I never gave up. I've been doing this for 6 years. I have a passion for it. Anyone can do this. It's just you have to do the little things right, but understand that it's a long-term game. Don't expect to be making $1 million in your first year, right? You're going to fail. Not necessarily something you're doing wrong. It just takes a long time and experience to get good at it. That's it. What is a position holder? Good question. Position holder meaning like I'm not holding positions for like a month's time or 2 months' time or a year's time. Like I'm not looking at the monthly time frame for order blocks, essentially. So I'm really more of an intraday, intraweek. Like I probably hold positions from a day to a week at most. Maybe. It just depends. Some trades I end up holding for a month, like the UJ trade that I'm currently in right now. It's been in for a month because it's been consolidating forever. But some trades, like I'm in and out. If I'm trading like off of a higher time frame block, I scale into a lower time frame area, and I'm almost like not necessarily scalping because I'm never really trading on the 1 minute, but I could be getting in and out for the session or in and out for the day with a quick 1 to 3, 1 to 5 within like a 15, 10, 5-minute area. It just depends on the setup, right? So, but that's a good question. I'm not a position trader in that sense. Let's see. What Forex pairs do I never personally trade? I never trade. I hardly ever trade like GN, GA. I don't like those pairs. I like NZD CAD, AUD CAD, AUD Chef, NZD Chef, and a few majors. But that's just me, right? You may love GBP JPY. I don't like GJ. I hate GJ. Never had luck with GJ. And that's just my personality. That doesn't mean that you shouldn't trade GJ. You may love it. Just like people love trading gold for some odd reason. I hate gold. So I'll never trade it. But it's what works for you, what you're comfortable with, what you like seeing, what you know, what you're used to. On EU, do you not see a 3-touch trend line and then run on liquidity where you have your black line? Let me go check. 3-touch trend line, run on liquidity. Hold on. You're talking about, I'm not sure what you're talking about. You're talking about like right here, like a 3-touch trend line, run on liquidity. If that's what you mean, then I'm not sure exactly what you mean. Like where I have my black line, like are you talking about like right in here? Like right there? If that's what you mean, then I'm still looking at these equal lows. I would like to see those lows run. So ultimately, it's either we go long or short, right? It's a one or the other. So that's why I said on Friday, I'm not trading this anymore. It's because market closure was approaching this area of interest that I had earlier. So I'm no longer in this. I should honestly get rid of that. I would like to see a pullback into supply. The supply is valid because of the time and price and the liquidity that occurred in this zone for potential shorts, where I could also potentially hedge at this level of demand as well. It's just a little tricky right now. That's just why I said like earlier, I'm not really interested in EU fully at the moment. Inside bar demand. Remember, guys, I can't. These live sessions. Remember, for those of you who are new, I'm not here to teach you the concepts. I'm not here to say, here, this is what an inside demand is. This is what liquidity is. If I go over it on the charts, great. These live sessions are meant to guide your directional bias for people who already understand smart money concepts. This is for people who already understand smart money and supply and demand concepts. If that's not you, then these live sessions, I'm sorry, are just not for you. I would recommend getting mentorship, taking courses, learning the strategy, because I just don't have the time to sit here and explain the concepts, because simply I can't do that. Because like I said before, I can't just tell you this is what it is and this is how it's going to always look every single solitary time on the charts, right? So it's going to look different every time. That's why I needed to create courses to show you through hours of video content everything that I want to say about it. I can't just explain it in 2 seconds. It's not how it works. So remember, this is for people who already have an understanding of the strategy, who want to just get further help in directional bias, looking for setups for the week, just kind of guiding their trading and helping them to take trades for the upcoming week. Sorry if that wasn't made clear to you guys earlier. That's just what, in my opinion, the whole point of this is. Your stop losses in most pairs seem to be a consistent amount of pips. Like, what do you mean, like consistent? Like the same? Like this, like around the same amount of pips? So let me share my screen again. So like, for instance, like AUD USD. I mean, I don't know if I don't use ATR. I mean, it's just a consistent amount of pips. I mean, it just so happens, maybe it's just coincidence. If that's an area of supply, that's an area of supply. Stop loss would naturally have to go above the previous high, or in this case, above this area of supply here. It just so happens to maybe be the same or relatively the same. It doesn't mean I'm making it like that. Same thing here, 28 pips. This is 25. This is 35. This is 61. It just depends, right? I look at my areas and I have my stop losses at appropriate positions. I don't use ATR or anything like that to to indicate my stop losses. I look at price action. Right? ATR is an indicator. ATR doesn't show you anything that you can't already see in the chart. Right? That's why I don't really use indicators. I use the 50 EMA because I use the 50 EMA to guide my directional bias, right? The daily and the 4 hour, just to guide the overall structure and the momentum. I don't ever use it by itself. I never just trade when it breaks the EMA or when it touches the EMA. No. Same thing with ATR. I can find my stop losses based upon swing points, based upon supply and demand zones, based upon the high or low of sponsor candles. I don't need ATR to tell me anything because I can already see it in the charts myself. What do you mean by intraday swings? Intraday swings meaning like intraday. Like what is intra? Like intra meaning within. Intraday, within the day. So swings within the day. So time and price events, like what I just showed you on EU. Like we had, here, let me show you my screen again because it's important to understand. Like EU, this is more of a higher time frame swing, right? These are higher time frame swings, just like that. Intraday swings are more like this, more where you're seeing for the trading session what we can do for like getting in and out for the day. We had London session, New York session, or pre-New York session, London session highs. We swept those highs coming into a previous high that formed the prior day's London session, filling imbalance. So buy to sell, we repriced with that supply. We went short, breaking and making a lower low. So now this is the high that made this low. This could be an intraday swing. Just for the time and price events, for the sessions that are at hand, like just for the day. Because we're not looking to get into this position and then hold for 1,000 pips to the downside, right? It's just getting in and out relatively quickly, whether that be getting in and out at that level of demand. So really just holding for potentially 15 minutes to an hour to a couple hours at most, just intraday, or to take out these equal lows, or even just to hold to this area of interest, which could take, I mean, it just depends on how fast it moves. It could take 1 day, or it could take 2, it could take an hour. Who knows? That's what I mean by intraday. What strategies did you try out before coming across smart money? I was in the retail space, kind of how everyone starts off. I did trend lines. I did, candlestick patterns. I did all that stuff through being a baby pips. I had a couple of groups I was a part of. I'm not going to call them out just because I don't want to do that, but I would say retail is where everyone usually starts. Yeah, so to answer your question, yeah, price action only. And the only indicator I use is the VFI to kind of show price volume divergence when price is distributing or accumulating within an area of interest, and then the 50 EMA just to kind of get an extra confluence. I don't trade with them solely. I don't ever use an indicator by itself. It's only just to build confluence with something I'm already looking for anyways, based upon price action. So is this your last live session until next month? Yeah, so this is my last live session until May. We'll come back the first Wednesday or Saturday, whichever falls first in May, and we'll do live sessions for that. So we're going to be doing a psychology webinar, like I mentioned, Wednesday, the 15th of April. And then the last weekend of April, I'm going to be doing just a YouTube video. It's going to be really cool. So stay tuned for that. I'm going to, I'm preparing for that for the next month, and I'll post that to the Trading Net YouTube channel. So definitely stay tuned for that. Hey man, I think you've asked that question like 5 times already. There's no like tips and tricks for intraday. Like I would have to sit down with you. You have to take my course first and really learn the strategy, and then we can go over intraday techniques and stuff. It's really, I can't explain stuff, within like a minute or so. I mean, just general advice for intraday trading, look for time and price, right? Time and price is very important. Understand the sessions, the timing, liquidity around the sessions. Make sure you're trading in the right direction of trend. So just like we saw on Euro USD. So I guess if I can answer your question, it would be, intraday trading. Make sure you're trading with the overall direction of trend. Make sure you're not having tunnel vision. Zoom out. Every single trade that you take, zoom out to see if you're following the right direction. When you're intraday trading, look for liquidity runs at London Open, liquidity runs at New York Open, fake outs from the Asian range, just stuff like that based upon liquidity concepts that we teach within our program. But again, I'm not going to be, I don't teach concepts here. You guys should already know that. We teach that within our mentorship. Again, this is just to help you with your directional bias for the week ahead. April Fool's joke about no Smart Money Sundays. Now we'll still hold Smart Money Sundays. That won't be a joke. I was actually thinking about whether I should pull a prank on you guys, but I'm not clever enough to think of that. What if I said that the April Fool's joke was that I'm actually not giving out a 100K funded account? That'd be hurtful. That'd be too hurtful, wouldn't it? Don't worry. We're still doing that. I will be giving away a free 100K funded account. All right. Any last questions, guys? We are at our 2-hour mark, 12 o'clock Eastern time. If you guys are good to go, I appreciate your time. Thank you so much. We will see you all in May. Well, actually, I'll see you guys in 2 weeks when we hold our psychology webinar. So definitely tune into that. I think it can really provide a lot of value for you guys, especially for those struggling with psychology and really just not getting over that hump that you are experiencing within your trading. And also, if you're a lucky winner, you potentially could have a chance at a 100K funded account. So I'll stay on for like another minute. Then I'm going to bounce, enjoy my weekend. I was up till like midnight last night doing work for you guys. So very tired. Appreciate the kind words, guys. If you guys are interested in, I understand and I really commend you guys for wanting to learn the skill. That's what I personally want for you, 100%. So if you are struggling and you are seeing that psychology is an issue within your trading in the sense of, okay, well, I'm losing money day after day, week after week, month after month, and I'm never getting anywhere because I'm losing money, I'm not making money, so I feel as if in order to make money, I have to force trades. Sometimes that can be the case. So that's why I'm always a solutions-driven person. I see a problem and I try to provide a solution, whether that be with my algorithms that people can place on their own account and have profit run automatically for them so they don't have to have that fear of, oh, I'm not making any money, let me just go force a trade while I'm learning to trade. Well, no, because you have money making on the side, so you're fine. So you don't have to force anything. You can actually learn the skill. But also at the same time, if getting funded is a problem for you, that's, again, seeing a problem in this industry. People fail challenges left and right. We want to provide a solution to that where we pass your challenge for you and provide you signals if you want. You don't have to. That's why we have different packages and different tiers based upon what you think that you need. But if that's the case, if you think that you need signals for your funded account to kind of guide your trading and your trades, then we do offer that. We started signals last Monday, so this was our first full week, and we ended up in the positive. It was a great week, kind of relatively slow, anywhere between 4 to 4.5% on funding pips, anywhere between like 6 and 7% on Nova trading. The difference is because of the different rules in the funded accounts for the different prop firms. This is why we have to close positions earlier than others, or not take certain positions. So if that's the case and you really wanted to make money on the side, so have that funded account, take our trades while you're learning to trade as well, so you can make some profit as you're going to kind of help with that psychology so that you're not forcing trades on your own personal account while you're learning to trade. It's also a way to alleviate that. So if that's something you're interested in, I'd be happy to talk to you about it. Everything is within my Discord channel. So if you guys navigate to, let me just go find my Discord channel here. There we go. If you guys are not a part of the Discord, if you want to join that, if you navigate to the Get Funded section and you scroll down, there's like a welcome page, there's like an FAQs page. So definitely read through that. There's a page about all the proof in the pudding. If you guys want to see like prior student certificates or actual accounts, we also have a Start Here channel for both prop firms, so Funding Pips and Nova. You guys can see the step-by-step on how to get started, all the different tiers, all the different packages, all the different prices, how exactly everything will work. And if that's something you're interested in or just want to talk to me more about it before you make a decision, you're more than welcome to book a call. It's within the Start Here channel. You can scroll down and find the option to book a call with me first to ask me questions prior. Totally up to you. But if that's something you're ever interested in, we'd be more than happy to work with you there. So yeah, I mean, even if you made 2%, let's say you took half the trades, or maybe you closed early or closed late or whatever on the signals that we sent, you made 2% instead of 4 or 6% on the other profit. 2% on 100 grand or even 200 grand account, that's 2,000 to 4,000 bucks. Boom, the service has been paid for your first week. Isn't that crazy? So I always look at it from an ROI standpoint. I don't care about the upfront cost of an investment as long as I can have a high probability chance of recouping my investment relatively quickly, but also producing a high ROI. So if something costs $1,000, yeah, $1,000 is a lot of money, but what the ROI on that 1,000, could that be 5,000 or 10,000 or 20,000? If that's the case, think about it in terms of a trade. That's like a 1 to 5, a 1 to 10, a 1 to 20. You know, those are the kind of type of trades that we want to take. Tim, let me go review your message to me, and I'll let you know. I just can't quite remember exactly the trade. I remember you talking about EU. I just don't remember exactly what they were again. So let me go back. But yeah, I mean, in terms of news, I mean, yeah, news is just used as the excuse to propel price. News should never be the excuse to close early or whatever, right? So never make news any sort of deal within your trading. It's only used to inject volatility to do the exact same thing it was always meant to do anyways. So if you're looking at a level, if that level is actually valid, whether news or not, it's going to be valid and it's going to make you money. If the level was invalid to begin with, news or not, it would have lost anyways. So that's why news doesn't matter. But yeah, Tim, let me I'll review your trades. I'll get back to you on Discord. Anyways, guys, have a great weekend. I thank you for your time. We'll see you all in terms of live sessions for trading next month in May. If you guys are interested in joining that psychology webinar, it is completely free. And I sent the link earlier. I will quickly send it again if I can find it. Let me see if I can find it. Google Docs spreadsheet. That was earlier. I'm not quite sure. Anyways, guys, follow me on IG. I'll post it to the Discord. I'll post it to the IG. I'll post it to the Telegram. I'll post it everywhere. I'm going to make a YouTube video on it. So you'll have all the information you need. But that's going to be in 2 weeks, April 15th, 11 a.m. Eastern Standard Time. It's going to be recorded. But unfortunately, what I can't do is the giveaway is going to be on the live. So if you're unable to make the live, well, then you're going to miss out on the giveaway because it's going to be on the live. So anyways, guys, hope you guys enjoy the rest of your day. Enjoy your weekend, and we'll talk to you all later. Take care.